Good morning, everyone. Welcome to another RF Crypto video. Today's markets have seen a small decline of 1.74%. I say small because a almost 2% decrease in the crypto markets isn't huge by any means. Anything above 5% would be significant, and something like 1.5 to 1.74% would still be considered as trading laterally. The global crypto market cap yesterday was 1.74 trillion. Today, now it stands at 1.71 trillion. Bitcoin went down by 1.72%. Basically, the whole market is in the red, and I think there is some consolidation going on at the moment due to the geopolitical risk that is occurring in Europe and the fact that this Fed will speak this week. And things aren't looking very good because of the soaring energy prices and the fact that inflation is going to be higher than expected. And people are kind of expecting the Fed to downplay the economic growth or the previously stated high levels of economic growth, revising that to be lower than expected. So lower than expected economic growth would increase fear in the markets, and because of this, there has been some sell-off activity, and hence we have seen the crypto market being painted in red. As I stated, the markets are trading laterally. Ever since the 10th of March, which is about 5 days ago, Bitcoin has been trading between the $38,000 and $40,000 support and resistance bands, respectively. Whenever Bitcoin wants to break out of the $40,000 band, it quickly gets sold back, the bears take over. Similarly, whenever the bears sell and the price goes slightly below the $38,000 level, the bulls quickly go back and buy the dip. So it has been a sort of roller coaster of ups and downs, but always between 38,000 and 40,000. And it just needs one little news to either go below this level and just keep going down, or go above this level and keep going up to the almost $42,000 resistance level. If the news is extremely good, it can even bypass this $42,000 resistance level and go all the way up to 45,000. But at the moment, it is trading laterally, nothing much is happening. People are looking to de-risk, people are looking to manage their risks and their expectations about what's going to happen in the world, especially with the Federal Reserve meeting coming up. So Bitcoin has been unaffected by Hong Kong's Hang Seng meltdown. So Hong Kong stock market had its worst day since 2008. So 2008 was when the global financial crisis happened, with Hang Seng China Enterprises Index, an index of mainland China companies listed in Hong Kong, closing down 7% on Monday and dropping another 4% by midday Tuesday. These are extremely big amounts in the traditional markets. We look at these numbers in the crypto markets and we just shrug it off because we're used to the high risk nature of crypto. But stock markets aren't as risky as crypto, and when we see 7 plus 4 or 11% decreases in 2 days, that is massive. That is a sign that an impending crash was to come and it finally materialized, or it's a fact that people are rapidly disinvesting in the stock market due to factors that are making people run away from this specific stock market. If you look at our charts, you will see a massive decrease in the HSCEI. It's down 16% in the last 5 days or so, and volatility has topped 40, which is the first time that the index has gone over 40 since the pandemic started. But we have to look at the reasons why this happened. So last Friday, the SEC disclosed a list of delisting risks that includes 5 US listed Chinese companies, sparking investor concerns about the delisting of Chinese stocks. So Chinese and US investors have been selling off because of this. Also, investors in Hong Kong have slowly been selling off because of connections between the territories market and that in China. Because there are risks that includes 5 US listed Chinese companies, the investors specifically of these companies are selling off and reducing their exposure to these sort of stock market risks. Also, because of China's encroachment of Hong Kong and greater control of the nation state, investors have become very concerned because Hong Kong used to be democratic, it used to be a free market, and it used to be a trusted economic hub of East Asia. However, with China's indirect takeover, or it was very direct, of Hong Kong, people have been scared that they're going to start implementing Chinese sort of more socialist policies that erodes free market values, and therefore people have been disinvesting in the Hong Kong stock market, as well as a lot of companies are moving their Hong Kong headquarters overseas, most notably to Singapore. And because of this, we have seen a massive decrease in the Hong Kong Stock Exchange's index. And although Hong Kong's market decline is regulatory and not macro-driven, some investors are looking down the near-term horizon and urging caution. For example, the CIO of Byzantine Capital, Baxt, told CoinDesk that he sees a fragile global economy that needs to break first before it can come back stronger. What he means by that is that all-time high intra-country wealth caps, along with all-time high sovereign debt levels and all-time high of inter-country connectivity, have created an extremely fragile global economy. And these are inflationary and hurt sovereign equities. And what he's saying is that globalization to this extent is hurtful. And despite the lack of correlation between Hong Kong's market volatility and crypto, if there's a contagion that brings down the global market, Baxt is bullish that Ethereum might be the tie that binds the world as it rebuilds. Well, Ethereum, he might be invested in Ethereum and that's why he might be saying that. But cryptos in general could benefit from this. They might see an initial crash, but they might recover quicker than stocks. And the contagion arises because the global market is connected. Whatever happens in, let's say, the London Stock Exchange affects the New York Stock Exchange. Whatever happens in the Johannesburg Stock Exchange in South Africa affects the Hong Kong Stock Exchange. So everything is interconnected, and that's where the fragility lies. It's the same thing that happened in 2008, right? Just because there was a crash in the United States stock market, the whole world suffered, and there was a global recession. As they say, whenever the United States sneezes, the whole world catches a cold. And this is obviously because the United States is a global economic powerhouse. Hong Kong isn't at that level. However, it still does have an effect on the global markets due to globalization. The effects of contagion might not be as prominent as happened in 2008, but there would be some downwards effect. So short-term Bitcoin buyers are transitioning to long-term holders, says Glassnode. Over the past week, long-term holders of Bitcoin increased their spending levels that suggest de-risking from the market, but hodling remains the predominant investing strategy. So there are a lot of long-term Bitcoin holders that are selling off, specifically because they want to reduce their exposure to geopolitical risk and just market risk in general due to the macroeconomic, social, and political factors that are hampering the growth of crypto and stocks in the global scale. Short-term holders who have held coins for less than 155 days continue to decline in number, but this is not necessarily due to selling. Glassnode suggests that while it is more common for short-term holders to sell, the recent decline in short-term holder supply can only occur when large portions of the coin supply are dormant and crossing the 155-day age threshold, becoming long-term holder supply. So what this means is that the number of short-term holders of Bitcoin is decreasing, but it's not because they're selling. It's because they're transforming into long-term holders of Bitcoin, which is exciting because it shows that there is belief that Bitcoin is going to do well. Why would you hold something that wasn't going to do well? Also, more than 75% of the Bitcoin circulating supply has been dormant for at least 6 months despite the recent uptick in selling. And what this means is that 75% of all circulating Bitcoin is held by people who want to hodl. On other news, Binance has been granted a crypto asset service provider license from Bahrain Central Bank. At the same time, FTX crypto exchange wins a license in Dubai to open local headquarters. So are you guys seeing what's happening here? So I think there is a crypto sort of cold war happening in the Middle East whereby both Bahrain and Dubai want to be Middle East's crypto hub. They're being very, very lenient in terms of their requirements to open a crypto company in their respective jurisdictions, along with granting of licenses, as well as they've been very, very, very crypto friendly in the sense that they're giving incentives for these companies to open their headquarters there. They're allowing companies to trade in crypto, obviously in a regulated manner, but a lot more freely, without a lot of bureaucracy, without a lot of red tape. And it is very, very conducive to do business in both Bahrain and in the UAE, specifically Dubai. So there are two quotes. First is Bahrain. Team Bahrain has built a world-class infrastructure to support the fast-growing blockchain and crypto industry with robust regulations. Collaboration with industry leaders such as Binance will further enhance our mission to establish the Kingdom of Bahrain as a leading business hub. So this is the key point, leading business hub. What they mean is leading crypto hub. Moving on to Dubai, the certainty and credibility that Dubai assures in its adherence to these commitments allow FTX to safely pursue its overall strategy of scaling towards becoming the first virtual asset service provider to enter global markets in a fully regulated manner. So the two key points here are leading hub and regulated manner. So both those codes mention regulation. There is regulation in both countries relating to crypto. This is especially good because it's attracting top talents into these two countries. It's attracting these companies that are rich in money. They can tax them and they can establish themselves as a hub in a very, very new and growing industry. So it's going to be extremely interesting to see how this tug of war plays out and between who wins, Bahrain or Dubai. And I mean, no one has to win. They can both win, actually. They can both challenge each other to make the crypto industry and the blockchain industry better in terms of trading and in terms of regulation. And let's hope that that happens. And that's it for today's video. Thank you very much for watching. If you liked the video, leave a like, hit the subscribe button, share this video with your family and friends, and I'll see you tomorrow for the next one. Invest wisely and cheers.